Hello, I'm Greg Vanell, and welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis, investment insights to help boost your trading potential. Coming up, the U.S. markets holding steady, all three major averages closing at new record highs in yesterday's session. Now the attention turns to the Fed. It's kicking off its two-day policy meeting. We're also taking a look at big tech. Several of these magnificent seven heavyweights set to report third quarter results starting tomorrow. And our debaters standing by. They got the bull and bear cases for Eli Lilly. Is the drug maker's high valuation a sign of strength or a reason for caution? That's all ahead. Don't forget to like and subscribe. You're watching TD Active Trader Live. It's been open for half an hour. Let's check out the S&P 500. As we said, the Dow, the S&P 500, the NASDAQ, all setting new records yesterday. They're building on it today. It's pretty modest for the S&P 500, but we have some modest green on the screen. Of course, we're also awaiting the Fed. That decision will come out tomorrow. They're behind closed doors, meeting for 2 days. Let's check out the heat map and see where the strength is, at least where we're just holding on. We got Microsoft up about 3%. That's back in the $4 trillion club. I do all this math in my head on the fly. We got, where are they hiding? Where's Apple? Somewhere on the screen. Oh, they got into the $4 trillion club today. They're just sitting below the break-even line. Of course, NVIDIA's been there for a while. And yeah, they're trying. Three companies now, $4 trillion in market cap. Really blows your mind. Let's jump into some earnings, though. They're a little small on this screen by market cap, but PayPal getting a nice boost, as you can see, out of the open. They got a bit of news. They're going to have payments, a wallet and ChatGPT, PayPal, and OpenAI signing an agreement to embed that payments wallet into that app. And starting next year, buyers and sellers will be able to complete transactions just through an AI tool. Well, you knew that's where it was headed. Okay, let's take a look at UPS as well. United Parcel Service blowing past the street's expectations for its profit for the third quarter. Also saying they're going to cut 34,000 jobs this year. The operational workforce, that's drivers, package handlers, that's a big number. 70% increase from its previous target. All that information together has the stock popping out of the open, but starting to come back a little from the highs, but still in positive territory. And that's your market update. Take on what's happening in the markets is here in a minute, and Jason Nadek from our TD Direct Investing educational team. Welcome back, guys.
Good to be back, Greg.
I know you're all fresh as a daisy. There was no reason to stay up too late last night. We're looking at you, Jay. But,
nothing really at all.
You just got to survive the next half.
The bags give me away.
You just got to survive the next half an hour, my friend. We'll start with here on the Magnificent 7 ETF you got in the sites. What the earnings coming up?
Yeah. There's a whole bunch of earnings coming up, of course, over tomorrow and Thursday. We're looking at the ETF MAGS. Conveniently, this is an equal-weighted exposure to the Magnificent 7 stocks, which are, of course, just a reminder, Alphabet, Amazon, Apple, Meta, Microsoft, NVIDIA, and Tesla. So it's a big week. Of course, it's a trifecta week, as I like to call it. We've got the Fed tomorrow. We've got big tech earnings, Magnificent 7, and we've got the China-U.S. trade deal, which is a framework being worked out with the potential of 100% tariffs off the table. But let's talk about the earnings on the Mag 7. So Microsoft's going to lead the list. They're, part of the big news coming out of them was the $40 billion AI data center deal that with chipmaker NVIDIA. So we'll hear more about that in the earnings. Alphabet also just had a recent partnership with Anthropic, another AI player that they partnered up with. Meta's still really harnessing the AI powered glasses, so we should hear more about those and how those AI features are going to come into I think they call it the Oculus. And then just coming into the more recent one, I guess the way I like to dub it, the least magnificent of the Magnificent 7, and that's Amazon. We're going to hear about AWS's growth, but specifically, they had a major outage not too long ago, so we should hear some comments around that as well. So let's go into the charts and see how the price action has been shaking out. I mean, it's bullish when you look at the price. So one of the major patterns that I wanted to first look at was this big symmetrical triangle formation that was forming, and we've got this long-term lower trend, or if you want to call it like a support area, which it's very much respected with the price, and we're quite a distance away from it at this point. We did see a major breakout coming into like May, and which has started this long bullish run over here. Now, we are at a price just yesterday because of the China-US announcement. We've seen that big gap up move over here, and we see it break past the 65 level, which is a key resistance. It was rejecting off of this over all of September, a bit of October, but we've broken through it. Now the key is we want to see it retest back, so if it does trickle down, we want it to bounce off that 65 level to ensure that this run is still going to continue on. So that's the key level to look forward, and this catalyst of the earnings could give it that momentum.
All right, this next thing you're looking at, I don't know much about them, but I like the name. It's going to be fun to say. Mercado Libre.
Mercado Libre almost sounds like those
rolls
Mucho
off
Libre,
the
yeah. Rolls off the tongue. So Mercado Libre, for the uninitiated, of course, this is dubbed as the Amazon of Latin America. We shouldn't be calling it the Amazon of Latin America because Amazon's getting into Latin America now. But they are the largest company by market capitalization within Latin America. They're a leading e-commerce fintech platform provider. And it operates through two of its main businesses, Mercado Libre Marketplace and Mercado Pago Services, which is financing arm. So they're going to be reporting earnings, in fact, on October, I believe October 30th is what we have here, or October 29th, I should say, Q3 earnings. EPS is going to be expected at consensus of 943, which marks a 20% year over year up. And the revenue is going to be at 7.25 billion, which marks a 36.5% year-over-year increase. So one of the big things with Mercado is that they're really moving into, similar to Amazon, like an advertising business. They're really extracting that, but are also having a growing base of their fintech users. And the other thing, they're really looking to aggressively expand into the key market areas, which is Brazil and Mexico. And they just launched recently, gone into the pharmaceutical business. So they're selling online pharmaceuticals. They're already in a number of different countries, Mexico, Argentina, Chile, but they just broached into Brazil, which is its largest market share, largest market for this business. Two things that investors should be keeping an eye out going into this earning print, though, is one is its lending portfolio, Mercado Pago. They exceeded 9 billion, which is usually seen as a good thing, but it's on the credit side as of June 30, which is the last quarter there. But it is potentially going to deepen its exposure to credit and currency risk across its key markets. And then finally, the competition's heating up. Brazil and Mexico is intensifying with Shopee, which is a C limited marketplace that's entering, and TikTok Shop. I didn't know they had one, but they're also getting to the market. But here's what the charts are showing here. We've seen it. I've got it mapped out since the start of 2025 here. We are in a strong bullish channel that's formed from late 2023, which is very much in place over here. We did had quite a bit of, I would say, a correction because it dropped from this sort of peak of 2503 right down to the 2000 level, but it did bounce off this healthy level here. And we're going into this earning prints off this bounce. It's respecting the support, but the next resistance area is going to be that 2350 area, which has to break. The expected move coming into this print is going to be at $50, so it's a big size move that's going to be expected for the stock here. So we'll see what holds on the other side of, when is it, tomorrow.
Right, an interesting name. You have a U.S. telecom on your site.
Yeah, it's not quite as magnificent as the companies that you were discussing. But we're going to talk Verizon, but let's first take a bit of a macro view of the sector. The telcos, in terms of like the 11 sectors, they're 10th out of 11, so not the largest by any means. But what kind of caught my attention was that over the last 3 months, the average of inflows, according to ETF database, there's 6th of those 11 sectors. So there's positive cash flow into the telcos. But one of the things also here I mentioned last week, the big iPhone sales, they've seen big upticks in the 17. Verizon should be well positioned with the largest mobile customer base in the US, but there's concerns over customer attrition, and the price hasn't necessarily been performing, and that led to a surprise CEO shakeup with Dan Schulman taking over, and that's not necessarily seeing big corrections in the price happening yet, and also with regard to some of the competitors, AT&T and T-Mobile, they've been pulling back as well in that same particular time frame. But it's not just mobile that Verizon has been focusing on. One of the big growth sectors for them is their and it's ultra competitive as well, just like wireless is around broadband and around their fiber networks. We're still waiting on closure of the big $20 billion Frontier acquisition they made last year, but they've just announced some additional partnerships with let me make sure I get the name right here, with Eaton Fiber, which is going to bring Verizon towards its 2028 goal of around 30 billion fiber premises. So this is big news for them. But looking at their chart, not a whole lot's been going on over a 7-month period. A big consolidation, a lot of sideways movements. But as you can see, when we move closer into kind of real time, it rejected off that kind of $45 kind of resistance zone. There were some really big red candles. Those are big long bodies showing us some really bearish tendencies here. And the stock has actually been heading into earnings is approaching its 52-week low. The last 2 times it's been around earnings, we can see there's been some positivity. There's been some gaps up, but right now there's a lot of momentum working against the stock. So we'll see what the new CEO's got to say. He's got a mandate of they're saying maximize value and growth. Those might be buzzwords, but one of the things is reducing costs. So we'll see how investors are feeling around that news.
All right, interesting things indeed. Thanks for that, gentlemen. If you at home have a question for our team, here's how you can get in touch with us. Just email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website, where you can try out the platform risk-free. You just open a practice account by clicking on Try TD Active Trader, that button right there. Then when you're ready to switch to a live account, simply export your workspace, start trading for real. Now for the main event, trading, debating, and this week the stock in the spotlight is Eli Lilly, a global pharmaceutical company focused on treatments for a range of medical conditions. You may have heard about the weight loss treatments as well. Before we get going with the debate, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only and should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Now back to the stock of the hour, Eli Lilly. What made you guys pick this stock to debate here?
Well, you said it, Greg. It's weight loss. It seems to be what's in vogue right now in the market. Of course, ever since it made it, it seemed like a revolutionary moment. And Eli Lilly is one of the biggest players in the space. Add to that fact, like you've seen the whole healthcare sector, which hasn't underperformed, in fact, the larger market. So maybe this is a bit of a turnaround. So it's a good one to look at there.
Jay?
And you mentioned the $4 trillion market cap for NVIDIA and Microsoft and Apple. The $1 trillion market cap on Eli might sound quaint, but it is the biggest player in the
I'd
world
take a trillion.
here. They've actually got a lot of manufacturing in the U.S. market, so from a tariff perspective, they could be well positioned. So it could be interesting to hear more about that.
All right, some interesting themes to jump into, so let's do it. Get some time on the clock. You each get the 2.5 minutes to make your case as the Bears and the Bulls. Some time to counter. Of course, draw from a hat as always. Heron's got the bull case.
All right.
Kick things off for us here.
All right, let's start with it. Let me start with a little story here. If growth were a drug, Lilly would be prescribing it, and its investors would be demanding a refill. And let's just talk about that market cap to start with. Eli Lilly, with its close to $1 trillion market cap, is by far the world's largest healthcare company. Stands as a premier growth engine in the pharmaceutical sector, propelled by its transformative GLP-1 class for diabetes and obesity treatment, of course. This is my main part of my argument that I'm gonna weight it on, is let's talk about the weight loss revolution. So GLP is one of the hottest trends in healthcare since the invention of statins. Lilly's twin superstars, let me hope I pronounced this correctly, Mounjaro, which treats type 2 diabetes, and Zepbound, which is for obesity, are blockbuster drugs tapping into a global market that's going to expect to hit over $100 billion by 2030. Now, when you look at Morningstar's modeling, they're looking to see that this GLP-1 therapies that Lilly has, about 2/3 of their total sales will be from these two by 2032. They've also significantly captured market share from competition, Novo Nordisk, Ozempic, and Wegovy, thanks to their superior efficacy in A1C reduction and weight loss as well. So they're industry leading. They also command more of the market share, around 57% in this space here. And the one last other thing I'll mention is the patents. You usually, with pharmas, you have patent cliffs. Once you get to the end of it, you lose this revenue. Well, they're patent protected until at least 2036. So that's providing them a really long runway and long-term competitive insulation that they're going to have there. Think of this as the iPhone moment for healthcare. Everyone wants it, and Lilly makes the flagship. Let's talk about the charts, though. Let's see what's unpacking over here. So, okay, anyone looking at this charts can tell, like, we've got a bit of a downtrend, not a bit, a major downtrend since the start of the year, where it's formed this big descending wedge pattern over here. But one of the big things about this pattern is indicative of a bullish reversal, meaning we want to see a break to the upside, in which we did. We saw this big outsized bullish candle move that happened on September 30th, in fact, And that was when Pfizer had struck the deal with the administration on, the reduction in the trust and manufacturing, of course. So this really boosted the overall space. So we've seen a new leg up at this 805. It's also captured what was a previous resistance, which is now going to be supported, tested it back there. And it has started this new upper channel. So for that reason, I'm very bullish. It's respected this emerging bullish trend that we've seen in the intermediate time frame. We should see on its way to getting close to the 900.
That was a bullish bull take. What does the bear got for us?
We're going to take a bearish bear take on that. So, all right, no question about it. Eli Lilly has demonstrated some dominance, but is in a hot market. But there's certainly no guaranteed, sustained, profitability here. If competitors start to undercut prices, if customers favor alternatives like some of the ones that you already mentioned, or there's regulatory changes, this is all a very new space from the healthcare perspective. The company's growth narrative could follow. So there's maybe some telltale signs that the bull case might be a tough pill to swallow. All right, but I've got three things kind of laid out for us. Valuations are through the roof. You mentioned it off the top as well. We're talking 53.7x in terms of earnings per share, their PE, which is much higher than both the industry average and their peer group. So it's really overvalued is kind of what the common thread here is. And given high multiples of growth, any misses or any margin depreciations could really cause a setback in the share price. Next. Hey, I know you got to spend money to make money, but the R&D expenses are sky high here. Some really astounding numbers. In 2024, R&D costs were almost 25% of all sales numbers coming in. We're talking a staggering $10.99 billion. Any pharmaceutical missteps, any money that goes out the door and isn't maybe getting that good value is really going to significantly impact their bottom line. And lastly, this is especially in the GLP-1 area. It's a competitive new industry that's ripe for new regulations. A few things here: the U.S. government is signaling that their intention to lower prices on drugs across the board, focusing on here. And insurance are actually considering limiting coverage so they can secure discounts. Actually, one of the major benefits suppliers, CVS Health, actually announced that they're going to be excluding Lilly's obesity drugs from its standard rollout in favor of some of their rivals' medications. So that's something to look out for. Let's jump into the charts here. Noticing here, we've got those the kind of a long-term kind of consolidating pattern here. But what's kind of jumping out to me was, if I take a look inside of that consolidation, we've had our last two earnings events has actually seen significant downward pressure on the stocks, giving up around 5.8, almost 6% of the share price. And one of the things that actually jumped out to me here in the Q1 earnings, really strong bullish candles, gap down regardless. We're seeing similar things happening here with regards to the price, a similar uptrend in the stock. We'll wait to see if we can get that same pullback that's been demonstrated the last two.
All right. Well laid out positions, gentlemen. Now it's time to go head to head. Mano a mano, 3 minutes.
Let's go for it. I'll go with the first punch here. So, Jay, let's talk about the valuation and get in front of that, of course. You're right. When you think about PE sitting at about 57 or 54, it looks exorbitant when you talk about peers sitting at 13 and 18 average. But it's all because of the earnings growth rate. When you have a 20% earnings growth rate versus peers who are doing single digits, that apparently flattens the multiple distortion that you might even see. The second thing, when you look at forward PE, approximately, which is 30x, that gives Lilly a very compelling entry point. You have on top of that, you have analyst price targets averaging 898, the highest target's 1190 on the street, which really does imply a 9 to 20% uptake there. But it goes back to when you think about earnings at 20% and your EPS sitting at a range of 249 to 532, that went from 249 to 532 in a single year, you're not expensive, you're exceptional. And exceptional demands premium.
Well, in the market, a lot of it is around timing, and I do want to make sure I give a second to the chart here. So we rejected off kind of that upper end of that consolidation zone, 865. We saw the stock rebound off of that. Heading into earnings, we've now bumped our head up against a more nearer term support line. One of the things I want to point out here is there's a study, the money flow index. It can be a leading indicator here, and one things I'm noticing here is the MFI is trending the counter counter to the trend, which could signify, we could be in line for a pullback over the next number of sessions. And with earnings being here, if we do get something less than an A+ report card, that could have the momentum kind of working against the stock.
I like how you brought MFI because I'm going to talk about RSI on the charts, because one of the big things on the charts you'll notice is I've got the 50-day crossing over the 150-day average called the golden cross, but it's the first time since early February they've been doing this with the bullish action. The other thing I'll point out is you can notice with the RSI, we're using RSI similar to MFI, not exactly the same because it incorporates volume in MFI, but you've seen a clear uptrend in RSI as well. It's been making higher lows ever since these push-ups higher, which gives me a little bit of confidence knowing that these moves are going to sustain on its way and break through that 865 barrier. So that's one to keep an eye on the charts. And I'll just say one thing in closing. When you talked about R&D, you gave a great number, because it's actually the research R&D compared to the return on investment sits for every $1 spent on R&D, they generate $5 in sales, which is industry leading across the board. So you've got a lot of money that's being well spent, and that's giving returns for investors here.
And that's an amount of money that's not going to go away, right? This is a highly competitive industry that's going to require continued dollars, and if those, once again, those margins are going to be constricted, those dollars are going to be maybe harder to come by. One of the things that jumped out, like, hey, we're talking about raising guidance. The company's feeling better about itself. Back in 2025, the revenue guidances were, I guess we're still in 2025, were increased $60 to $62 billion.
Yeah.
Guess how the market reacted? Oh, ho hum! Actually, we had a pullback the last one that.
Well,
when
the
that
market's not appreciating the raised guidance, though. So the numbers are coming in. Do I get extra minutes?
Go. Our producer just saying, ring that bell again. You're done. You're done.
Ding him out.
Dun, dun, bum, bum. All right, that's a lot of information. We've laid it out. We're going to find out how a bull can play it, how a bear can play it, through options. Jump into the platform. Why don't you kick things off as the bull here? Yeah,
let's do it. So let's go back to the charts here. So one of the ways a bullish trader could play this with earnings coming up, one thing that what earnings brings about in general with options is volatility. And with volatility, you just see a bit more premium on those options. So going long on those options can be a little bit of a risky play. So we're going to do the other side of that. We're actually going to look to sell volatility, in fact. So expecting that once the earnings does play out, you have a volatility crush, and you can take advantage of that by selling it. So one strategy I'm going to look at, Greg, is called the Iron Condor strategy here. So let me just expand this a little bit so we can see it in clean view. So what this strategy essentially is and I'm going to do it with a bullish skew or bullish lean. The reason is we're looking to sell two credit spreads. One's going to be a put credit spread, which is the bottom one over here, and one is a call credit spread. So what we're looking to do is to see, we map those levels out. So we saw the 800 was a key sort of support level where the price was sort of bouncing off of. So we're looking to sell the 800 put over here and buy a 780 to protect us. It's a 20 wide spread is what we have. And on the top side, this is why I say it's a bullish skew, is we expect the stock to move up. And the next level where I think potentially the stock could take a break is at the 900 level. So we're looking to sell just at the 900 level, which is about a 20 delta out there. Again, keeping the width the same, 20 points out. So buying the 920. And all in all, this is going to generate, we're going to collect premium. So we're going to collect about $13 in premium, total premium. So on a single contract, that means $1,300 for this. And then what we're hoping to do, and without break-even prices, we want the stock to kind of stay between these two ranges. Between 800 and 900, that's our best outcome scenario. If that happens, we get to keep the $13 in this trade. So whatever we collect up front, that's our max profit we get to keep there. I know you like talking about.
Yeah, it's right there, and the max loss if it doesn't go your way, if it doesn't stay in that little range.
Yeah, if it doesn't stay in the range and moves outside into our spreads, then what's going to happen in the worst case scenario is either pushes beyond the 920 price on the top side or below the 780 price on the bottom. And in that case, the spread will be fully in the money, which we don't want it to happen. So in this case, it would be worth $20. And we would have to go in the market and buy it back at 20 when we only receive 13. So the difference being $7 is what we would stand to lose on this trade. On a single contract, that amounts to $700.
All right, interesting trade. How could a bear possibly play it?
Actually, Hiran and I have just similar potential trades, except mine's just missing the short put side of things. I'm going to, one possible way here is a credit call spread, so a bear call spread, if you will. So it's an opportunity for us to once again take advantage of that volatility, sell some premium with hopes that we're going to be able to kind of capture that. Our goal here is to have, before we look at the strategy, is to have our trade expire worthless, and so the premium we take in is going to be our profit that we're going to receive. But looking at the chart, this is a chance for us to take short amounts of time. We can see that the vertical yellow line, that's expiration, just looking to take out a couple weeks, get us out beyond earnings. Earnings is going to typically come with a volatility crush, meaning that we might be able to buy back our options for less money, or ideally we can even keep them till expiration and realize max gain. The kind of gold line that I've got on the chart, this is kind of a near-term resistance that's happening around 825. We can see the stock has butted its head up against it a couple different times, and even with today's candle, we can see it's rejecting off 825. We're giving ourselves out to 840 as a short strike. So we're selling the 840s, buying the 850s. We make max gain anywhere below 840. So if this 825 resistance can hold in place, that's going to mean good things for us. And we're only needing to hold out for we're looking at like less than 2 weeks out to November 7th. So the goal here is taking in about $2.55 a contract. It is a relatively small contract. You could size up your trade by doing 2, 5, 10, whatever is within your budget and your risk tolerance. You can certainly do multiples with the trade. So we're looking to take in about $250, $260 of credit on that trade.
If it doesn't go your way, you had it on the chart there with your max loss.
Yeah, we've got that on. And that's essentially why we do credit spreads. They're risk-defined trades. We're buying a further out-of-the-money strike. In this case, it's $10 wide, $10 above. So the max loss is going to be the width of your spread less the credit you took in. So we're taking in 255. The loss would be 745 if we're doing one contract.
Of course, you can always close out those contracts ahead of time, right? If you're just thinking this isn't working for me.
Either it's not working for me, or I want to limit my losses, or lock in my gains. You're in control. You've got the ability to manage your trade. Expiration, even though it is a shorter time frame, you're not required to hold all the way through that period.
All right, interesting strategies, guys. Thanks for that. And thanks for laying out the bear and bull cases. For Eli Lilly, just a reminder to our viewers that this debate was for educational purposes, does not reflect our personal opinions about the stock. Before we move on, Jason, you're going to elaborate on the money flow index.
Yeah, we brought it up in today's conversation, and it's kind of one that I look at, I know Heron looks at on a regular basis. It's worthwhile kind of having a quick discussion with the group. So think of money flow index, or MFI, as it's commonly known, is like RSI, so the relative strength index, which is a very commonly used indicator. But this one is actually adding in volume. So you're giving a track the inflows and outflows of cash into the trade. On the chart, I happen to have I've got it up on the chart with relative strength index, so we can kind of compare those. RSI being on the top, the MFI money flows on the bottom. Both are going to be indicating overbought and oversold zones. There's kind of horizontal teal lines that you're seeing on that. The default setting to the MFI is going to be overbought at 80 and oversold at 20. With anything in the platform, you can certainly customize those. But what we're looking for, like we saw in my conversation today, is that we're looking to identify the trend of the indicator. So in this particular case, we can see the MFI is trending down. One thing to look out for is that trend of the direction of the indicator. Is it running with the price trend, or is it running counter to the trend? One of the things here when we're looking about momentum indicators, they can be leading indicators, unlike a moving average, which can be used as a lagging indicator. The leading indicator can tell us that there might be a directional change coming if it's moving against this here. So the way we might use this to trade, similar to RSI, is, for instance, if the MFI moved above overbought, we could be looking to either go short or exit long positions as it pulls back into the center portion of the study. So it's a really a kind of useful indicator. Not one I'd be using kind of on its own, like with one single data point, but using it to confirm other things we're seeing. You can use it in conjunction with RSI. You can use it with Bollinger Bands. You can use it with any other kind of indicator you've got in the chart. But it is just a nice view to give us the strength, momentum, but then also the volume component.
All right, interesting stuff, guys. If you at home have a question about the TD Active Trader platform, or if there's a stock you want to see These two guys go head-to-head on. Just send an email to td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It'll take you to our TD Active Trader Live website. Then you scroll down, you find a tab that says Join a Live Masterclass. As luck would have it, this Wednesday, 2 p.m., our very own Jason Maddock hosting an interactive session about TD Active Trader. It's going to explore all the main features of the platform. Registration is required, and it's open now. Before we wrap up the show, some of the key things that we have on our radar for this week, what we're focusing on. Of course, the Fed has entered its two-day meeting. We should mention, too, that the BOC also has an interest rate decision going to be delivered tomorrow morning. TD Securities thinks it's a 25 basis point cut from the BOC, and then they're done. That's the terminal rate. They're going to stop there. So if you got floating rate debt, that's one to keep an eye on. What are we expecting from the Fed?
Yeah, so Greg, Market Watch is expecting at least 25 basis points cut or quarter percentage down, putting them in the range of 3.75 to 4%. Now, we should mention, this is amidst a data drought that they're experiencing, driven by the shutdown, of course. They've been trying to keep the rates higher for longer to fight inflation, which has just remained sticky. But one thing, the recent CPI data that just came out, it's stubborn, but it's not going to the upside, which it's not surging out of control, which probably means it's the more pressing concern is obviously the labor market, which they have to get in front of.
You have a 3-year-old, don't you? Stubborn?
Yeah, stubborn. I know a little bit about that.
Inflation at 3%, kids at three years old, stubborn.
You got to manage that. So it tracks. So they're going to get ahead of that, and then the expectation is there's possibly one more cut in the final meeting of the year there. But apart from that, we're going to peel back onto this a little bit more on Thursday because we've got Danielle Booth joining us on our Active Trader Live show. So we'll parse this a little bit more and talk about what's going on with the markets and how the Fed's going to see the rest of this year and into next year as well there. But what else I got is earnings. We're talking about, the one I've got in focus, of course, is Qualcomm. Ticker symbols QCOM. So they had some big news coming out, which I'll go into in just a moment. But they're a fabulous semiconductor. They're a global leader in wireless technology, focusing on 5G chipsets and AI capable. You probably have heard of this. They're Snapdragon processors they're famous for. So Apple used them for quite a bit. Samsung uses them in their products as high-end phones as well there. They have Q4 earnings coming up on November 5th. Consensus is going to be $2.87 on the EPS revenue of $10.75 billion. But the big news that they're going into this earnings with is they're entering the chip race, the AI chip race. They announced they're going to be releasing new artificial intelligence accelerator chips. They call them AI 200 and AI 250 starting next year. It's based on the custom hexagon neural processing unit. That was a bit of a mouthful for me.
Well done.
Yeah, I got that one out. But the big thing they're really touting is the total cost of ownership is going to be a key benefit because it has lower consumption, and we know AI data centers are power hungry. So this is going to be
earlier this year, the market got shaken up by news that someone else had lower consumption.
Exactly.
Right,
so we'll see what this does when it comes to into the foray into the market. They've already signed a deal with Saudi Arabia's Humane, which is a Humane company, which they're going to be producing the chips for there. But going into this earnings, there's a couple of things. They've got future growth supported, from the multi-year agreement of Xiaomi in China to power multiple generations of their flagship devices. And also, Snapdragon-based PCs are really starting to take more hold of the market share. 9% of Windows laptops now account for those chips. And Meta's really utilizing them in their Quest VR headsets and their Ray-Ban smart glasses as well. But they do have challenges in the form that Apple may be considering dropping them completely for their modems that they use in their phones. And then you've got competition from Samsung, who's producing their own chips there. But looking to the charts, I've got the weekly chart pulled up just because the price dynamics have been incredible. We've seen this big down long run from 2022 into 2024. We saw this big upshoot that happened where it captured all-time highs, just reaching at that 230 level. And then we saw this big pullback that happened going into 2025. Now, we have started a new momentum, a new channel, bullish channel that we saw. It's been respecting this price level quite a bit, heading into the 185 level, which has been a key sort of resistance area throughout this year, which would mark what was a previous high there, and it actually just broke it on the announcement yesterday, Greg, on that chip announcement, and that's going to give it a new leg up. It is a weekly candle, so we didn't get a confirmation of the close yet, so we want to see if the earnings coming into this will give us that push into that 185 level, and the 185 is going to be the new support area that we might create. So this is one to keep an eye out on, but a lot of strong bullish momentum heading into that earnings print there.
Interesting stuff. Jay, you got an oil major in your sights.
We do. This is they're a big player. We're looking at ExxonMobil. They've got their earnings coming up actually this Friday. So we all know Friday is going to be Halloween. So investors will be waiting to see if they're going to be more trick or more treat with what they've got to say. Now EPS is actually expected down about 7.3%, which is about or $1.78 a share here. One of the things I wanted to kind of talk about is lagging oil prices with regards to them. So. Big news out of OPEC, right? That we all know that there's a lot of oil being produced here now. There's actually been from the second largest member of OPEC in terms of barrels per day. Iraq is actually petitioning in negotiations to actually increase their daily supply. Right now, they're bringing to the market about 4.4 billion barrels today. They're looking to increase that to 5.5 billion. It's saying the lower quotas for them are stifling their economic growth potential. So, but just to kind of put this in perspective, if they were to bring an extra 1.1 million barrels today, the 1.1 on itself would be the 19th ranked producer in the world. So this is no small amount that we're talking about. But let's kind of jump ourselves into the chart. We can see that we have this falling, kind of descending, this wedge that we've got here, which is typically seen as a bullish reversal. The stock has actually broken through, and outside of that, it's shown some hesitancy, kind of filling in a gap that was happened earlier in kind of late in the spring, I should say. So we'll see if that can we'll see what that can go. I think one of the things I'll be looking for and listening for when we talk about earnings is those as oil prices come down, how is Exxon going to be kind of going to be positioned? They've set a target for themselves to be their break-even oil at $35 out into 2027 yet. We're not there yet. They're not there with that sort of performance, but we'll have to take a look here. Another kind of positive sign for them in terms of price action is we've seen the MACD. We're always looking to see the MACD line and the signal line cross. That's happened. We actually crossed also into positive territory, so that's another bullish signal. But once again, big news coming up on Friday. The world is going to be anxiously waiting. I think that's a little dramatic, the world, but but certainly, I'll be
end of time.
Yeah.
Dun, dun, dun. The kids will be excited about getting free candy. Gentlemen, another fine show. Always great performance. I think a round of applause for Jay, because I think he got 30 minutes sleep.
He made it.
This guy
great
is
chart work.
hardcore fan. They were tied when I went to bed. So, but Jay, all right. That's our show for the week. As always, investors should perform their own due diligence before engaging in trading. Thanks for watching.